So we'll be starting entering the part three of this book today, Trading Psychology for Dummies. And we're just going to proceed without wasting time. Emotional sovereignty. So in this part, we're going to develop our personality as a trader, learn to act in an emotional sovereign, strong-minded way, recognize the benefit of keeping a trading journal, set yourself up as your own coach, work to keep sabotaging beliefs and negative self-talk in check. So these are all the things that we're going to study in this part. So in this chapter, we'll be moving to chapter 5. And in this chapter, we're going to be understanding the meaning and the purpose of trading journals, linking market analysis with self-analysis, tracing psychological patterns, focusing on solutions and rules, developing a trader personality, trading as part of a team. Chapter 5, seeing trading as personal development, of which is a personal development something. So keeping a well-structured trading journal is a useful way to get, excuse me. Okay, keeping a well-structured trading journal is a useful way to get the learning process rolling as you develop your trader personality. So we are advised here to keep a well-structured trading journal as a useful way to get learning process rolling as you develop your trader personality. The journal can work to focus your market analysis as well as your self analysis at the end of the trading day. The aim is to uncover your trading patterns and, if necessary, change them. By keeping a journal, you get to put your thoughts and behavior patterns to test. You self-critically ask yourself why you think and act the way you do when trading. In other words, keeping a journal structures the self-observation process. This chapter, you learn how to lay the foundation of your development. You see how to draw your attention away from problems and toward possible solutions. You then can perceive the importance of comparing your character and personality traits to the requirement of various markets and financial instruments. The aim is to find a suitable trading style for you personally at the end of this chapter and make it a point to remind you that trading doesn't need to be an occupation for lone wolves. In fact, you can learn a tremendous amount by working together as part of a team of like-minded people. Real and virtual networks accelerate your development process. So keeping a trading journal. Moments after the market closes, you still have vivid memories of each trade, as well as the thoughts and emotions that accompanied each one. After a day, after a few days, you will probably have forgotten or suppressed many of the details. Your ego is a master of self-deception and sees itself as being good at blocking out or reinterpreting unpleasant events. That's why it's vital that you make a record of what happened in a timely manner in the form of a trading journal. You don't want to delude yourself, do you? Remember, your ego has the habit of focusing on what it wants to see. A well-kept journal forces you to see what you need to see in order to be able to trade well. I freely admit that it sometimes requires a lot of self-discipline to write down and evaluate your trades after each trading day. It's not easy to document how you feel about each trade, but you are leaving valuable information and insights on the table if you don't do this. It would be a shame not to take advantage of this learning opportunity. Here is reiterating the idea of journaling. In chapter 3, I talked a lot about the high heart pattern recognition. Analyzing your traits after the fact helps you recognize important aspects you may have overlooked in the heat of the moment. In retrospect, you can see your traits with other eyes because you will have gained some distance and you will be able to retrace your own thinking and behavior patterns. Maybe you will even recognize some rather conspicuous emotional patterns. Doing so give you an opportunity to learn from your mistakes. I will be the first to say that it is definitely unpleasant for your ego to have to deal with the mistakes you made, but it is the only way you will learn. It's reiterating the importance of trading journal. Looking into the basics of journaling, a trading journal should always consist of two parts: the technical part, the psychological parts. The technical parts document neatly what action you took and how you traded over the course of the day. The psychological part explains why you acted the way you did, what motivated you to act or to refrain from doing so. In other words, figure 5.1 and 5.2 show you example of what the first two pages of a trading journal might look like. Let's take a look at it. Dates. It contains date, time, demo, remoney, instrument, setup, signal indicator entries, exit position, and loading periods. All these ones, I believe, if you are using, there is trading journal apps these days that help us document all these things automatically and even give you analysis of what happened daily. So I believe that app can help in this regard. So trade rating, is it grade A, B, C, random trade open by coincidence or planned? If not planned, why not? Stop loss limit set by opening trade and adhere to? Yes or no? If not, why not? Profit target set before opening the trade and adhere to? Yes or no? If not, why not? Emotional states and behavior during current trade. Were you tense as you followed the trade? Did you intervene in the running and opening the position? The reasons. Were you feeling relaxed in the observer position as you let the trade run its course? If so, why was that the case? That's figure one. And evaluation. These are the lessons I learned from the trade, technical as well as mental. Profit loss in dollar, profit loss as a percentage of the account. Did you realize rule-based profit slash losses, or did your profit slash losses come from breaking your trading rules reasons? What can I do to improve my performance with my next trade? Which mental practice preparation exercise did I employ for this particular trading? Affirmations, visualizations, relaxation techniques, breathing exercise, and call. Use the trading journal for the trades you make. Record the feelings you experienced as part of each trade. Every individual profit and loss trade you write down helps you when you complete your postmortems. Documenting your trading day helps you with these two tasks: recognizing technical and emotional patterns, identifying opportunities for improvement. Let's review the figures again. I mean, yes, the figure and emotional state and other stuff evaluation, just lesson and then profit and loss in general, average as percentage accounts. Did you realize? Did you realize you base profits on the can I do to improve my performance administrate which mental something so like is on the organization fitness and current did not use any mental preparation. So the analysis also shows you whether you have managed to achieve profits and losses in accordance with the rules you have set for yourself or by floating Whew. those signals, even if it sounds illogical at first. It's generally better to conclude a plan trade according to your risk with a loss than to break those rules and randomly close with a profit? Or is it a case where you simply lack the self-discipline and confidence in your own strategy necessary for success? On plan wins, let's take that paragraph again. The analysis also shows you whether you have managed to achieve profits and losses in accordance with the rules you have set for yourself or by flaunting those same rules Even if it sounds illogical at first, it is generally better to conclude a planned trade according to your rules with a loss than to break those rules and randomly close with a profit. Or is it a case where you simply lack the self-discipline and confidence in your own strategy necessary for success? Unplanned wins trigger feelings. Unplanned wins trigger feelings of joy and lure you into a false sense of security. Your ego triumphs and lets you think you have excellent instincts. Hubris will probably lead you to break the rules further and indulge in impulsive behavior. This is the reason why even if I see a setup and it doesn't align with my something, I always refuse to take those I always refuse to take those I always trades because I know even if it ends in profit, I know it will encourage me to do the same next time. And if my end in loss, so that's the reason why I always resist myself. Mhm. Unplanned wins triggers. Okay, so we've read that. Don't overestimate your abilities. You may in fact achieve wins even though you broke the rules. Just don't attribute your success when breaking the rules to some magical gut feelings. You are confusing coincidence with ability. So it's just a coincidence because next time you break your rule, it might break you. So when you without rules, you are at the mercy of your emotions. At some point, a lack of rules is sure to turn out badly and you will lose control, which can become expensive. A random win isn't an indicator of profitable trading. If you have a proven and profitable strategy, the wins will occur on their own if you stick with the rules. So if you have a proven and profitable strategy, the wins will occur on their own if you stick with the rules. Okay, so yes, that's the ones we eventually come. And when they come, they will roll it. They will roll it. Excuse me. Very hungry. Your goal is to learn from each trade. You will use your experience so that you will use your experiences so that you can continually improve yourself. That creates self-confidence and mental strength. Keeping a trading journal lays the foundation for your development to become a successful trader. The Golden Circle, the British author and business consultant Simon Sinek uses the metaphor of the Golden Circle to explain how successful people act and what inspires them. According to his model, successful people always start with the core question of why and then work outward from the inner circle toward the outer circle. Start with why. How great leaders inspire everyone to take action is the title of his international bestseller. The basic idea behind it can be easily applied to trading. Your inner drive and emotional patterns explain why you trade the way you do, and they also reveal what you are trading for. The conscious and the subconscious goal you are pursuing, in other words, why motivation, beliefs, and emotional pattern. How trading behavior and how you implement the one. What the trading plans and strategies and the results and their results, the result of the why. So why, how, and what. Hmm. Most traders focus largely on market analysis and perfecting trading plans and strategies. Okay, this process works from the outside to the inside, a mechanical method that leaves you emotionally vulnerable. If you don't know your goals or what you are trading for, you will lack the discipline and perseverance you need as soon as you are under pressure and stress. You will lose your emotional balance, break your own rules, and make unnecessary mistakes. Your first losing streak will throw you for a loop. You will give up because you have no inner drive to get back up and continue. You lack the mental resilience to prove yourself on volatile markets. Successful traders know exactly what they are doing, how they are doing it, and why. They are inwardly convinced of the rightness of their actions. They have realistic expectation and a clear objective. These are very, very important. Like I said in our previous episodes, the reason why I'm trading personally is for freedom. I like the freedom of it. The money is secondary because obviously it's going to give me, but working on something for the past 5 years without actually achieving your financial goals yet is something that is that calls for great resilience because it is not something that is easy and it takes a lot of mental capacity to do that. Because at the end of the day, if one is not careful or not, what is it called? There will be a problem at the end of the day. But, for the freedom that I have trading, I so much love it that uh, I've considered some other professions that are lucrative, but for the father, I don't need anybody. I don't need to pitch any business to you. I don't need you. Even these videos that I'm making, I don't even need you to watch it. That flexibility alone makes me love this profession like mad. I don't need anybody, no sanction, nothing, nothing. I can just easily open an account and begin to trade, just put money and continue. You don't need to affect government. You don't need to do this. Even if I make profit, government will take down. If I put in money and they will only tax me on this something. In fact, the layer that comes with this, the freedom that comes with this profession, so much gives me joy. I am a forest trader, I'm not a content creator, and I can easily post content anywhere I like. If you like, engage. It's boring, it's not boring, it's none of my business because I'm not actually expecting anything. So these freedoms alone is enough for me. So much enough for me. You don't need to answer to anybody. You just can wake up, you can do your business anywhere, you are free to go anywhere, you are not restricted from doing anything. You come on. The advantage of this thing is so much more than what so if I dedicate 10 years to achieving this goal, more is more than what it more than more than what it come on. So search for the deeper meaning, your own vision, just like as described as the deeper meaning that I'm freedom. To be able to do what I want to do when I want to do it. Ehen. That's my major motivation. That's the reason why I'm doing this thing because it gives me that opportunity. So no matter what comes my way with this trading, no other profession can give me this type of something. If you enter sales, you will talk to people, you will motivate them, you will still even lie. Yeah, if you lie, you are lying to yourself. If you are doing anything, in fact, that's the reason why I love this business so much. So search for the deeper meaning, your own vision, in other words, in your trading. In your journal, answer the decisive questions of why you are trading and what you are trading for. So we are not if you are here to just trade for the money, really you don't see the money, you move on to another thing. So carrying out the technical analysis. In the technical part of trading journal, you need to examine your market analysis and evaluate your trades. Among other things, you should be able to answer the following questions. Were you technical? Were your technical and fundamental analysis correct? What did you overlook or wrongly assess? What did you get right? What did your strategy and setup suit? Did your strategy and setup suit the market? How was the timing of your trade entrances and exits? Were the position sizes chosen and the number of trade made in proportion with market movements? The daily analysis will help you to continuously improve your trading. It is a form of assessing your position daily. The day's experiences will teach you how mature your trading ideas are. Without being distracted or influenced by the ups and downs of the market, you will be in a position to calmly develop your processes and strategies so that you can better prepare for the next trading day. For many experienced traders, the trading journal is an important instrument for subsequent pattern recognition. With the perspective, with the perspective a little distance might bring, You may recognize chart patterns or formations that you may have overlooked during the hustle and bustle of daily events. You can compare these to historical situations. This process of daily repetition sharpens your awareness of implicit patterns. In short, you are training your intuition and potentially developing new trading ideas. Finally, you can include these insights in your strategies. Handling the psychological analysis. The psychological parts of a trading journal is above all. The psychological part of a trading journal is above all an instrument for recognizing your own patterns as a trader. It is a helpful process of self-observation that will improve your concentration and attention when trading. In general, patterns include recurring thinking and behaviors, recurring emotional reactions in certain situations. Example, psychological problems affecting traders often go unnoticed and occur according to the same script. You have prepared thoroughly for the trading day and placed trade strictly in accordance with your trading rule book. At some point, a trade goes wrong and you start losing money. You get angry and subconsciously strive to get your money back. You start to float the rules, flaunt the rules or ignore your planning for the day. You lose more money. Does this sound familiar to you? You want a successful close for the day, but you find yourself moving from frustration to frustration. You have long since lost your emotional balance and feel trapped. The market has become a threat and you are identifying with your trading losses. What does that mean in concrete terms? In this example, the emotional pattern becomes clear. You posted a trade loss and feel like a loser. This triggers a chain reaction of poor decisions caused by your emotional state. You leave the streets and narrow and break your own rules. Answering scaling questions. What is your emotional experience of trading? Do you notice psychological patterns in your subsequent analysis? Apply that same skill to answering the following questions. Do certain market situations inspire fear, either making you freeze or triggering over trading? Do you have the tendency to force trade in order to earn money instead of waiting patiently for the right opportunity? Are you revenge trading because you want to recoup lost money? Are you involuntarily hesitating and missing good entry point opportunities? Do you feel worthless when, over the course of the trading day, no actionable trading signals pop up? Do you frequently change your trading strategy if it is not working? No, I don't do that. If it is not working, we stick to it. We try to see until it prove itself. That is certainly not working. That is certainly not working. So I'm in version 3.0 with my strategy. So automatically you know what's working and what's not. Then do with version 3.0. I know with one, I just pick any PDRs that I can find on any whatever time frame is what I take. But then we move on to finding setups on fine as 1.0. 2.0 is finding setups on 5 minutes. And 3.0 is now doing general analysis of the market and sticking with time frames now. So we work with time frames now. We use monthly and weekly for open, high, low, close, institutional structure trading, and daily for our major classical structure, then determining our daily range and picking our PDAs, using 4 hour to follow daily, then try to using picking our entry on 4 hour or minimizing 4 hour at the same time picking our entry on 4 hours, then aggressive entry on 4 hour and 15 minutes conservative entries. Do you frequently change your trading strategy if it is not working? No. Do you always behave according to the same scheme regardless of our market moves? Do you tend to act against the market and fight to be right? Do you prefer to follow the head and run after every market movement out of the fear of missing something? Do particular market phases make you feel really comfortable and confident? Maybe you will think of other emotional issues and challenges that apply to you. When your list is complete, I recommend this two-stage exercise. Exercise one, evaluate your entries on a scale of 1 to 10, where 1 is the minimum impact on your trading success and a value of 10 is maximum impact. The scaling result. The scaling results clearly show you how to assess your problems and how you weight them. The scaling technique is often applied in the field of systemic therapy because subjective perceptions and emotions are not objectively measurable. Allocating numbers allowed comparability and weighting. This creates clarity and directs the focus to the solution of these problems. Number two, ranking your trading problems. Start with the heavyweight problems. Make a table that consists of two columns. Write the weighted problems in the left column and write potential solution in the right. Most of the time, you already know the solution, but your attention is still stuck on the problem. The sense and purpose of this exercise is to make you aware of where your real problem lies and to draw your attention to the solution of these problems. Creating clarity. As part of the journaling process, the psychological analysis provides you with valuable insight into your trader personality. I am sure you will discover some typical reactions you were not aware of if you carefully document your moods and feelings during the day. During the trading day, you will learn how to identify the triggers for recurrent emotional patterns. The triggers are usually situational. When you are in a position to recognize these triggering situations, you can take precautions and adapt your trading accordingly. Remember, be clear about the negative impact of emotional patterns on your performance. Make sure this is readily apparent. That means notating in excruciating detail in your journal what losses occurred or what opportunities you missed and doing that day after day. When the cost of these damaging patterns becomes feasible, we will develop the motivation to interrupt these trading patterns. So all these things are telling us to start journaling. So the way I do my own journal is to just give the bottle how I spent my days. Just put it down. But I'm not frequent with it because there are some days that I know that okay, this day nothing more. Yeah. So most times you already know the pattern and we try to kind of work with it. So rethinking starts in your brain. Refuse to let problematic patterns control you by identifying with them. You are not the problem. The old patterns are, and you can change them. Recognizing the issue behind certain behavioral patterns. Keeping a trading journal will become routine after some time, and you will discover more and more interesting peculiarities and regularities. Keeping a trading journal will become routine after some time, and you will discover more and more interesting peculiarities and regularities. You will find out a great deal about yourself and develop a good feeling for your patterned trading behavior. So I guess it's still encouraging us to do what that it will kind of become a routine if we practice and do it more and more often. So experience shows that most traders don't usually have dozens of different patterns. Instead, they seem to be higher level patterns that run like a common thread through all identifiable patterns. This may sound complicated at first glance, but it's important to understand. For example, if your own personal issues stem from deep-seated fears, the effect of those fears will turn up in other problem patterns. If the following statement correctly characterizes your trading actions, it is clear that the basic pattern that characterizes your trading behavior rests on fear. You exit too early because you're afraid of losing book. profits. You move your stop loss limit because you're afraid of realizing losses. You choose position sizes that were too small out of fear of losses. You miss out on good opportunity because you're afraid of entering the current market. Superficially, that's the reason why these are the reason why all these things are not even reflecting here at all. Because with the type of strategy we are using, even if we have a losing streak, I know that's okay. Maybe because of this and this and this. Because if I have a stop loss, then it's an invalidation that my trade is not moving in the direction that we expect it to move. So superficially, these behaviors appear to be different problem patterns, but in reality, they are all linked to the single core problem we need to address, the fears. Chapter 15 deals extensively with this topic. So we'll get there. Replacing harmful patterns. The approach to moving from problem patterns to solution patterns occur step by step. Okay, so with the help of the self-observation documented in writing, you'll be able to recognize recurring problematic patterns. Two, recognizing emotional patterns helps you interrupt. Then if you recognize the patterns that if something follows, then you'll be able to recognize and move with them. So the entries in your journal will make you aware of the fact that certain situations trigger emotional behaviors that damage your trading success. You have calculated the cost of harmful patterns. Self-awareness interrupts automatic behavior because you are now motivated and in a position to willingly undertake counter measures. Tip: exchanging information with the trader colleagues and comparing your approaches with theirs offer good opportunities to uncover thoughts and behavior patterns. When you look at your trades through the eyes of others and regularly solicit feedback from colleagues, you will learn a lot about yourself. We can read more about this topic at the end of the chapter. The gap between your internal perception of the market and internal external reality may close. Example: if you find yourself falling into destructive behavior patterns, one possible solution is to simply interrupt your trading, take a break, and create some emotional distance. Number three, replace a harmful emotional pattern with a useful behavior pattern or new perspective. Your focus will move away from problems and toward solutions. Admittedly, this requires a great deal of mental flexibility and adaptability, but you will get there with loss of patient practice. So, what would be a useful behavioral pattern and new perspective? Here are a few suggestions. Avoid market faces that make you feel uncomfortable. Trade only in time frames that suit your strength. Learn to accept trading losses as a normal part of any trading strategy. Learn to immediately interrupt your trading when you find yourself reacting emotionally. Technical stuff. The trick to changing counterproductive behaviors lies in modifying the harmful pattern. To achieve effective change, you don't need to change the entire pattern. It is enough to change individual elements. The entire pattern is detected by the interaction between the contiguous elements. You have had plenty of opportunity to test yourself and practice on the demo accounts. That's if you do demo trading. If, as a result, you have discovered that your trading style is one-sided, meaning you always follow the same schematics, you can extend your repertoire with the help of paper trading. In that way, you will see how to react flexibly to various market conditions. But if you really want to achieve something, this objective clearly, personally, I'm going to suggest that at least you can use site accounts or do or use real money. They want money that you can afford to use. So finding solutions at least that will trigger some emotional responses from you. Because if you are using them more money, you are not in any way attached to it. You lose money, and even if you go into losing streaks, it's not going to have any effect on you. You will easily just rationalize, clear it out, and load another money. Whereas it's not that's not the case when it comes to real money. So finding solution, let's move to another subtopic, which is finding solutions. See whether this situation sounds familiar. You are disciplined at keeping your journal and you have detected a series of harmful patterns, but you can't get rid of damaging patterns in practice. Systemic therapy formats often use the solution focus method. It is all about drawing attention to solutions, your abilities and strengths in trading. In other words, the thing is there is more to your behavior than the effects of the problem patterns. One can also point to the patterns of success. The basic assumption here is that you either have or can develop the resources you need in order to be able to find the right solution independently when your perceptual focus is no longer associated with your problems pattern. Your solution horizon expands automatically. Effective change means differentiating, introducing differences to the old pattern. In other words, think of it as throwing a stone onto the still surface of a pond and seeing the ripple spread out to change the entire surface of the water. So, I believe we all understand that. Focusing on the solutions, focusing on solutions rather, consciously responding differently. Assume that your trading journal reveals that you keep making the same specific trading errors, entering and exiting the markets prematurely, for example. First of all, focus on the times when you did not commit this error. What were the circumstances like? Like when you ended up not making this mistake, what did you do differently? So the answer to these questions will show you possible solution patterns so that you can consciously respond differently. Either that or you can set up rules to help you avoid such trading error. So if you always enter your trades prematurely, you can set the times during the time that you did not commit that same error. What did you do differently? So these are the things that is suggested to us here. Or we can set up rules to avoid such fading errors. So tip, problem patterns are always associated with specific emotional and physical conditions. Physical exercise, relaxation, breathing techniques, as well as conscious mental distraction are quite helpful when problems arise. When you change your underlying condition, you will be able to see your problems with fresh eyes and reevaluate them. So giving yourself time and distances. Creating patterns of success. Problem recognized, problem gone, you might say. If you recognize a problem, problem disappeared. So being aware of a problem allows you to focus on possible exemption and solutions. If what you are doing doesn't work, do something else. If something you are doing doesn't work, do something else. It's one of the basic premises of neuro-linguistic programming. In trading, you should concentrate on what works well. In the past, you have demonstrated that you have the required skills to succeed. Something has led you to be dissociated from your competencies, meaning you've temporarily checked out. To assess your resources again, you need to place focusing on solutions at the core of your trading strategies. You need to find your patterns of success. So, I believe it's something we will eventually arrive at when we continue to show up every day and journal. So, to do that, be sure to keep a trading journal, paying close attention to what worked during the day. Ask yourself the following questions. What went well today? What did I do right? What worked better than usual? Excuse me. What worked better today than usual and why? Concentrate on your strengths and opportunities for improvement. One, emotional patterns are the result of coping strategies from earlier phases of your life. Whew. Let's repeat that. Emotional patterns are the result of coping strategies from earlier phases of your life. Strategies that subconsciously repeat themselves when trading. You see the world of market through the internal conditioning you have experienced over the course of your life. The feelings and beliefs that results are your basic patterns. The feelings and beliefs that result are your basic patterns. Obviously, there are similarities between your problems in trading and significant events repressed conflict in your earlier life. If you have experienced trauma and emotional wounds, I strongly recommend that you seek professional help. The market is the worst and the most expensive place to work on your psychological problems. If you have external psychological problems, the the devastating effect of trading is the fact that a lot of things that are condoned outside the world of trading cannot be are not permitted here. And if you have any unresolved issue outside trading and you are coming here to just take out revenge through trading and other stuff, you're going to still lose. Another subtopic, we have setting up rules and establishing new habits. Identify problematic patterns of thoughts and behavior and find a solution for how to prevent this problem in the future is the key to your success as a trader. Initially, it may be hard to maintain these changes. You may fall back into old habits. What can you do to avoid relapses into old patterns? It is simple. You walk through the solution patterns again and again until the new behaviors become habitual. Speaking from a neurobiological point of view, the neural circuits have consolidated to such an extent that you can automatically retrieve the desired behavior without having to think about it. The key lies in repetition. And if you remember in part one, chapter one, we've studied the power of repetition. Study the power of repetition. And here it is coming out to us again to do what? To keep repeating the good habits so that at least we'll be able to master those habits. One important element is still missing rules. To turn solution patterns into habit patterns, you need fixed trading rules you can follow. Remember, a set of rules is your foundation, giving you support and stability in volatile markets, and it keeps your emotions under control. Unfortunately, the behavior innate that's innate to humans isn't what leads to success in stock market. That's why rules are important corrective measure. Rule-based trading imposes discipline and forces you to do the right thing. Try out this trading rule on a demo account first for these 2 reasons. You will learn whether the rules make sense and show success. Paper trading allows you to extensively train the allow you to extensively train the implementation of new or modified rules. You learn to comply with tried and true rules. You acquire new target-oriented habits. A problem recognized means a problem averted. It's just like dreams. Once you receive a dream about something, then problem is half solved. So a problem recognized means a problem averted. Let's assume you have recognized that you set your stop loss too narrowly and are regularly being stopped out in volatile markets. Your aversion to loss is sometimes so strong that you keep closing position before you reach the protective sell stop. Problem recognized. Your stops don't consider price fluctuations. You're interfering on going trades, and the fear of losses disrupts your emotional balance. Problem averted. You determine your maximum loss tolerance per trade in advance, and stops are set depending on volatility. The result is a solution-oriented group. You are rarely stopped out. You have played through the potential loss per trade, and it is bearable. We remain emotionally stable and feel no urge to intervene. Trading rules are more than mere specifications about what you should do or should not do. You have internalized the rules because you are convinced you are doing the right thing. You have understood that trading without an explicit set of rules is doomed to fail. Tip: evolutionary heritage and incalculable emotional outbursts leave you no other choice than to trade in a process, in a process-oriented, rule-based way. Remember, the advantages of keeping a trading journal are obvious. You train your inner observer, thus improving your ability to recognize patterns. You learn to interrupt emotional patterns and to replace this with solution oriented behavior. Getting to know your true trader personality. Being a trading journal is an important component of trading your self-observation and self-reflection skills. By evaluating your interests, you are engaging in practical personality development. You learn a lot about your thoughts and behavior patterns, as well as your strengths and weaknesses. Part of practical personality development means you can make an unfiltered comparison between your self perception and an objective view. Discrepancies often show up in your performance. Your trading results hold up a bit less mirror to you to your true ability. You can't just run or hide. Even if your self-esteem suffers, the profit and loss account at the end of each trading day prevents self-deception. And that's true. Account will always reflect, will always show you the mirror. The numbers are there in front of you in black and white color. Warning, again and again, I see traders who lack self-awareness. This includes the willingness to take a critical look at themselves. The result is that they overestimate themselves. In other words, they systematically misjudge their own competencies. That can be expensive in trading. Self-awareness is the first step to improvement. It's a motto that is sometimes meant mockingly. The fact is your trading is faulty and you can't help but notice it. In psychology, the ability to be self-aware is the decisive prerequisite when it comes to developing your personality further. You don't want to over or underestimate your abilities. You want to be able to judge them as objectively as possible. Examine how personalities develop. Throughout this book, I stress the fact that your personality is one of the four factors for success in trading, alongside proven processes, sufficient practice, and awareness of one's own talents. So, who are you? Really, it requires courage to describe your own characteristics and shortcomings to see who you really are. You probably realize that being self-aware requires a healthy degree of confidence. It isn't so easy to accept who you are. These are the three basic pillars of personality development: self-awareness, awareness of one's major characteristics, as well as one's strengths and weaknesses. Self-acceptance, the ability to accept yourself as you are. Self-transformation, the ability to develop further independently of others. Psychological studies have concluded that sustainable success in trading is a function of your personality and has less to do with intelligence or exceptional talents. That is why you should pay more attention to the further development of your trading trader personality. Personality research techniques of agrees that the majority of the character traits and characteristics you possess are innate and likely remain stable throughout your lifestyle. Okay? In this respect, personality development is rather a process where you mature your character. Some characteristics can be corrected or consciously and corrected or consciously and actively developed. In each and every one of us, potentials lie dormant that we can develop. That is the core personality of development. Personality development also promotes resilience, a competence that comes in handy in a challenging trading environment. It strengthens our problem solving ability decision-making skills, and capacity to take action. Tip: would you like to strengthen your silence? The Silence for Dummies by Dr. Eva can show you uh, finding the right market for your particular personality. Finding the right market for your particular personality. The personality of the market must fit the trader's personality, says the well-known trading psychologist Brett Steinberger. In my experience, this is absolutely true. The markets, the financial instruments and time frames, the way we trade, all should be matched to your personalities, to your abilities and strengths. Different trading systems provide different psychological challenges that fit different personality test types. What do I mean by that? You can't force your personality to match a different trading system. Your abilities and characteristics will show you your possibilities and your limits when it comes to trading. It is easier and more expedient to find the right market niche and the corresponding trading style than to bend your personality to fit another style, which is true. So if you want to change your personality because of the trading system you have, then it is detrimental. But it is easier for you to kind of find the trading system that fits you rather than what is it called? Rather than trying to. So personally, my own objective is for you to learn and learn and learn and learn. You know, I believe in you learning a lot of something, technicals, and try to design your own that fits personality correctly. And that's what I do. So that won't be sustainable. It will take too much effort. Use your demo account and try out the various markets and financial instruments using multiple time frames. You can play around and then finding the right trading style for your personality because it's all in demo mode anyway. Try to answer these questions. What are your goals and expectations in trading? What trading style matches your work and lifestyle? How much time do you want to invest? How much time can you invest? Are you a discretionary trader or do you prefer system trading? Do you take a fundamental short technical approach when it comes to analysis? Do you prefer stocks or currency markets? Do you prefer scalping, day trading, or position trading? In other words, which time frames do you feel most comfortable with? How often do you trade? The number of trades per day or week. Are there times of the day or specific weekdays where you trade more successfully? Do you follow trend or do you like to swim against the current, looking for trend reversals, for example? Do you focus on a few big trades or do you regularly run many smaller trades in different markets? How flexible are you when it comes to implementing rules? Do you tend to make intuitive decisions in other words? If you take the trouble to answer these questions honestly, you will find clarity about which time and which niche might suit you. This is the foundation for developing trading strategies that fit your personality. You trade in your comfort zone, so to speak. In that way, you reap the benefit of your strengths. You trade by doing what you do best. Example. Are you the type who is glued to the screen and love the hustle and bustle of trading and making fast decisions? Do you love taking numerous shots, short time positions that you hold for only a few minutes? Then scalping liquid and volatile market is probably fine. For the analyst with a fundamental approach whose strength lies in holding position over several days or weeks, a completely different trading style is appropriate. And you, where do you see yourself? Warning, don't miss time frames by turning a loss making day trade into a longer term position. That strategy usually goes wrong. You are leaving your niche. Define the niche you want to be. You want to trade in clearly and unambiguously. A clear boundary imposes discipline and helps to ensure that you remain in your place of strength. The positive emotional experiences you make there will help to develop your personality. Many problems that trader reports can be attributed to the fact that they are trading outside their preferred niche. Even worse, traders often don't even know their niche and wasted their abilities. Personally, I don't like trading in a fast environment. I hate making fast decisions. I do make mistakes, so I take my time and trade accordingly. Remember, it makes little sense to adjust. It makes little sense to adjust to the market or to force yourself to trade in a certain way. The best trading system is always the one that suits your personality goals and living environment. This system is the only one that will lead to success and with discipline. So these are all the things we must observe. And characteristics of a sovereign trader personality. You assume full responsibility for your trading results. You don't let stress and emotional pressure fluster you. You see setbacks and mistakes as learning opportunities. You wait patiently for your opportunity and look for long-term success. You analyze, question, and reflect on yourself every day. You are good at assessing yourself and you are able to solve problems independently. You consistently pursue self-selected strategies and don't allow majority opinion to influence you. You your trading style allows your strengths and competencies to shine. Trading as a team sport, avoiding tunnel vision. Most people describe trading as a lonely activity in small associates with countless tasks. This preconception may also be a reason for the majority of beginners giving up out of frustration or failing after a short time. So remember, humans are social beings who are not naturally predisposed to sitting alone in front of screens all day. This is demotivating in the long term because you don't get feedback and you can hardly develop. Silo thinking and a lack of adaptivity are some of the consequences. Intellectual isolation is an obstacle to success. Even though if trading is solo business and you are your own in this something, but at the same time in fact technology has made it easier for us to relate with other traders. We can easily study their works, listen to them, try to see what they are doing right and what they are doing wrong. Find the sincere ones out there. So remember, nothing says you have to sit by yourself in front of a screen. Look for like-minded traders, mentors, or sparring partners. Seeing trading as a team sport gives you another key to becoming a successful trader. Trading should be intellectual, personally challenging, and fun. Tip: building a network of like-minded traders, either virtually or join an existing network. Doing so brings with it multiple benefits. You drive each other to think more intensively about the market and about trading ideas. We get to share and discuss your observations, ideas, and analyze. And don't forget, build a network of like-minded traders, either virtually or real. And a lot of virtual networks exist and these days. And even if you as a trader and you are dealing with friends that are not trading, if you are not strong mentally, bro, it's going to weaken. So it's better to always belong to such group. So you challenge each other and are forced to see situations from another point of view. You avoid tunnel vision and are thus able to broadly expand your horizons. It is important to work together on a trust basis and have a clear rules for cooperation. Virtual platforms or forums that mainly communicate via group chats in particular require regulated processes and a code of conduct. Otherwise, you won't have the confidence to openly discuss your traits and ideas. Developing creative ideas. Albert Einstein is quoted as having said, creativity is intelligence of a form. Creative thinking can be fun and works best in teams. Creativity is a quality that has become increasingly important in trading as well. Traditionally, it was sufficient to gain an advantage in the markets with a well thought out and successfully tested strategy. You could make a good money with discipline and self-control. That is no longer sufficient. The times have changed, and with them, the rules of the game have changed as well. Market structures actors, market structures, actors, and interdependencies are changing even faster and more dynamically. Example, high frequency trading, the use of algorithms and program trading, as well as the increasing importance of exchange traded funds, ETFs, are influencing liquidity conditions of the market irrevocably. The German Federal Bank has warned that in periods of market stress, this can lead to distortion and sudden dips, the much feared flash class crashes. Discipline and self-control are still important character traits in trading, but you also need new competencies like adaptability and creativity. According to Steinberger, you need to the ability and the instincts to recognize and adapt to market changes at an early stage. Creativity is the key to developing new approaches and ideas. Your trading processes should leave room for creativity. Tip, make use of one of the classic among creativity methods, brainstorming without passing any judgments, exchange with other members of your team, any spontaneous trading ideas you come up with. Then assess and analyze the ideas. This promotes creativity thinking and provides exciting results. You inspire each other. Thinking against the brain is highly desirable. Putting your cards on the table. It never ceases to amaze me how many traders are reluctant to share their analysis and performance. This secrecy is an unmistakable sign of trading problems. Nobody is apt to admit their weaknesses, lack of preparation, or an inability to come up with a coherent set of rules. Or maybe you have found the holy grail and want to keep it to yourself. Disclosing your trading process is the first step to further development. You want to make progress if you isolate yourself or hide well. Successful trading is a creative development process that is at its most effective when you work on it with others. You exchange ideas and like to be challenged. We can learn a lot from other traders, understand certain circumstances, and you may avoid the serious mistakes others have made. Warning: merely copying other traders' strategies isn't a recipe for success. Merely copying other traders' strategies isn't a recipe for success. It won't get you far and is an indication that you have no confidence in your own abilities. You are afraid of making mistakes. You may be afraid of failure, and you can find out more about trade influence in chapter 15. Ideally, you will find trading colleagues on the internet and in our online community with whom you can share regularly. It is important to be honest and disclose everything, to admit errors and be prepared to discuss controversial ideas and strategies. And frequent and honest feedback culture benefits all parties. It promotes a creative change in perspective and new ways of looking at circumstances. If you can communicate openly and honestly about your truth, you have no place to hide. That imposes discipline and is incredibly liberating. You will have a good times and bad times with trading. Even when you have learned to accept these facts, it is good to share experiences with other traders. Frankly, it is comforting not to be alone on this emotional roller coaster. Everyone experiences this circle and has various strategies to deal with them. You can learn a lot from that. Don't underestimate the value of professional and social interaction. A honest dialogue can energize you and give you renewed confidence. The accountability reports. Look for a mentor, trading coach, or a good colleague you can trust. Prepare reports at regular intervals, weekly, monthly, quarterly, in which you disclose everything. Your profit and loss accounts with explanations. Your entries in your trading journal, your development plans accounts for everything. It should be a combination of a professional goals appraisal and a discussion of the psychological background to your trading behavior. I promise you that it will cause a quantum leap in the development as you make yourself into a successful trader. Building networks. You can find lots of good newsletters, blogs, and online communities, as well as trading platforms on the internet that you can use to create a successful professional network. Tip: use independent reviews of broker and online platform in order to gain an overview. Progress reports and comparative analysis are made by traders for traders. It may be worthwhile to initiate trial subscriptions for trading services from various professional traders to get trading recommendations and market assessments. Webinars, online seminars, and the exchange of information with other traders are also instructive. I can recommend two trading services suppliers recognized by the markets with a wide reach that are worth trying. Investing.com, tradingview.com. Both offer free and paid services. This includes up-to-date chart analysis of individual values and the markets, fundamental analysis, written news and courses, expert forums, and webinars, for example. Tip: follow the best analysts and experts who regularly publish in online forums and community and question their way of working. Get in touch with them, try to understand their strategies and approaches. How did they arrive at this forecast? Why are the charts drawn in that way? This strategy can be quite instructive. You can work as an independent trader without being isolated if you are part of a team of like-minded people and regularly share ideas and experiences, either virtually or in person. We've come to the end of chapter 5, which is seeing trading as a personality development. Thank you very much. We'll continue tomorrow into chapter 6, which is practicing mental self coaching. God bless us all. Have a lovely and a profitable day ahead.